Welcome to The Explainer. Today, we're going to break down something that, let's be honest, can feel super complicated. Malaysian income tax. But forget all the confusing jargon. By the end of this, you'll have a real handle on how it works and what you need to do. So, let's dive right in.
I mean, just look at that. An incredible skyline. You see these gleaming towers, all the infrastructure. It's the picture of modern Malaysia. But you ever stop and think, what actually pays for all this? What keeps the lights on? Not just here, but for the whole country.
So what is the common thread that connects these huge towers with the roads we drive on and the public schools our kids might go to? It's something that links every single working person to the services we all depend on.
That's the one. Taxes. It's the financial engine that powers the entire nation. It's not just some bill you have to pay, it's your contribution to the society we're all a part of.
So at its very core, a tax is a compulsory charge. It's not optional. It's the main way the government collects the money it needs for everything from our hospitals and highways to our national security.
Okay, so we get what tax is for. But now for the first and maybe most important question for you personally. Do you actually have to pay it here? In Malaysia, that all starts with something called your residency status.
And this is really the first hurdle, Your entire tax situation, what rates you pay, what deductions you can claim, it all pivots on whether you're considered a tax resident. And get this, it has nothing to do with your citizenship or your passport. It's literally just about how much time you physically spend in the country.
And here it is. This is the magic number. 182 days. Just think of it as basically half the year. If you are physically present in Malaysia for that long in a single year, the Inland Revenue Board, or LHDN, is generally going to see you as a tax resident.
And here's why that 180-day rule is such a huge deal. If you look on the left, as a resident, you get two massive perks. First, you get progressive tax rates, which means they can start as low as 0%. And second, you can claim a bunch of personal reliefs to lower your final bill. Now, look at the right. Non-residents, they usually get hit with a higher, flat tax rate, and they miss out on all those valuable reliefs. So yeah, it's a big, big difference.
Okay, so you figured out your residency status. What's next? Well, now we got to figure out what the government actually considers income.
The net they cast is pretty wide. The tax authorities are looking at income from pretty much any source that comes from Malaysia. Of course, there's your main salary and your bonus, but also any profit from a side business, rental income from a property you own, and even things you might not think about, like royalties or a pension. Basically, if it's a gain or a profit, it's probably on their radar.
Okay, this is the part that can look a little scary, the actual math. But don't worry, we're going to make it simple. Just think of it like a 5-step path to find one single, very important number.
Let's walk this path together, because this is really the heart of the whole calculation. First, you have gross income. That's easy. It's every single ringgit you earned, the whole shebang. Next, the system lets you subtract specific costs of earning that money, like expenses for a rental property. That gives you your adjusted income. Then, for business income, you can deduct things like wear and tear on equipment, which is called capital allowances. This brings you to your statutory income. You add up the statutory income from all your different sources, like your job and your side hustle, to get your aggregate income. And finally, the best part. You subtract all your personal reliefs for yourself, your spouse, lifestyle purchases, to arrive at the final crucial number, your chargeable income.
And that is the number that matters. After all those steps, your chargeable income is the final amount the government will actually apply those tax rates to. The whole point of the process is to make this number as low as you legally can.
Now, for Muslim taxpayers in Malaysia, there's another very important piece of the puzzle that comes into play, and honestly, it's a real game changer.
And this is a really important difference to get. Think of it like this. A tax relief shrinks the pile of money that gets taxed in the first place. But as a zakat rebate, it's totally different. It doesn't touch that pile. It directly reduces the final tax bill you actually have to pay. It's a dollar-for-dollar discount on what you owe.
It's a direct ringgit-for-ringgit reduction. This is incredibly powerful. If your calculated tax is, say, 500 ringgit, and you've paid 500 ringgit in zakat, your tax bill can actually become zero. It's a pretty unique feature of the Malaysian system.
So we've covered who pays, what they pay on, and how it's all calculated. Now let's talk about your responsibilities in this whole process.
And this is so important to understand. Malaysia uses a self-assessment system. That means LHDN doesn't send you a bill. The responsibility is entirely on you to do the math, calculate your income, find your reliefs, figure out the final tax, and get it filed correctly.
And a huge part of that responsibility is keeping records. You have to keep all your supporting documents, your receipts, invoices, bank statements, for a whopping 7 years. If LHDN ever decides to audit you, you'll need that paper trail to prove your numbers were right.
And you definitely want to get this right, because the government takes tax compliance very seriously. The penalties for getting it wrong can be really severe. Even for just an honest mistake, the penalties are steep. Let's say you underpaid your tax by 1,000 ringgit. The penalty could be double that amount, on top of a fine. That's a heavy price to pay for an error.
But if the authorities figure out you did it on purpose, that it's willful evasion, the consequences become drastic. We're talking higher fines, potential prison time, and a penalty of 300% of the tax you tried to hide. The message from LHDN is crystal clear. Be honest and be accurate.
So, after all that, what is the most important thing to remember from this whole explainer?
At the end of the day, paying taxes is more than just a transaction. It's a civic duty that funds the very fabric of our society. Understanding the rules isn't just about avoiding penalties, it's about making sure you are playing your part correctly and with confidence. The real question is, are you?